using this sort of network structure that we observe in how people are interacting. So Reddit is very useful because you have anonymous users with some identifier, and they post those submissions, which they can then upload for other people to see or download if they disagree with it. And then they can also comment on the submissions. And so effectively, once you observe certain people commenting on maybe a new stock, a new opportunity, and then watch them produce new activity from what they've seen, it was interesting to think about that as some form of social contagion, which we then wanted to model and, more importantly, measure, and then somehow relate to what was actually happening in financial markets.
Hi everyone, thanks so much for tuning in. Before we get started, I just have a few short messages. First off, don't forget to like, share, and subscribe this podcast. It's the best way to help us grow and help me get on bigger and better guests. Also, don't forget you can pre-order my book, To the Moon, the GameStop Saga, right now by following the links in the description below. We've also got a few quick sponsors for the show today. In the month of November, I'm going to be running a giveaway contest for the subscribers of this podcast. You can win some advanced copies of my book, signed of course, a GameStop voucher worth $50, or a 1-year subscription to Riverside.fm Pro worth a whopping $288. All you have to do is follow the steps in the description below. You can follow me on Twitter, sign up to my mailing list, or share the contest with friends. Comedy is a really crucial art form, especially in a world where government power seems to be rapidly expanding. It's one of the most effective ways to speak truth to power. And to that end, today I bring you the Behind the Bits podcast with Scott Curtis, a podcast about the tragedy and triumph of stand-up comedy. Every week, Scott has a new comedian on the show to talk about inspiration for their comedy, the struggles of the industry, and how they find themselves stumbling into the world of comedy. In one of my favourite recent episodes, Scott spoke to Liz Mail, a New Jerseyite who began comedy at 16. The show can swing between hilariously funny and incredibly poignant at times. She spoke about realising the problems you had as a child in retrospect, smoking weed as a waitress, mental health, breaking rules, and the wild rollercoaster of performing on stage. You'll get Behind the Bits wherever you find your podcast. Apple, Spotify, and more. That's Behind the Bits with Scott Curtis, the best podcast to get to know the people behind the jokes. Cryptocurrencies are all the rage these days. Over 100 million people now own cryptocurrency. Some for the memes, some for the long-term value, and some for the underlying technology. But there hasn't been a coin or token that has emerged yet that truly replaces cash or currency. This is where Dash comes in. Dash is digital cash, a user-focused cryptocurrency which you can spend anywhere, anytime, and any amount for fees less than 1 cent. With hashtag DashDirect, people can spend their Dash at over 155,000 major US retailers and get a discount and money back into their Dash wallet. No banks, no fiat, just pure crypto, with an average saving of 5%. Anyone can participate in the network, and Dash is widely available for purchase around the world. The ingenious Masternode network means sending any sum of money around the world is as simple as tapping your phone at your local grocery store. So you can say goodbye to slow transactions, complex international account numbers, and high transaction fees. Dash gives you the freedom to move your money any way you want. Grab a coffee, split a check, or pay your phone bill. Dash moves money anywhere to anyone instantly for less than a cent. Lovely. Right, let's do it. So, hello and welcome to another episode of Chatter. Today I'm here with Julian Winkler, a doctoral student at the University of Oxford, Department of Economics, and co-author of the paper Reddit's Self-Organised Bull Runs. Julian, welcome to the show.
Thank you for having me. It's a pleasure to be here.
Yeah, no problem. It's exciting to get to talk to someone about GameStop, and we're gonna delve into some deep ideas about data and online communities and how they interact and stuff. So it should be an interesting chat. So what first tipped you off to like this whole GameStop thing, or just like the meme stock phenomenon in general?
So GameStop, I don't know so much, to be honest. I kind of forget now. We started working seriously on data from Wall Street Bets around March 2020. And I think what really ticked us off back then is mostly conversations that we were having with other people, some in finance, some also in the university. And I think the general key point that really got us interested is that there have been a lot of those websites around for quite a while. Yahoo Finance, The Line, I believe, StockTwits, and academics have already been researching the influence that social media has had on, I guess, investing patterns, especially among retail investors. But Wall Street Bets really came across as the first instance where you could trace trading patterns back to it. So where they were really having an impact on how markets were trading on certain stocks. And we got this from some of the people we know in finance, which got us really interested. Also because we kind of come from this background in economics where we want to study social interactions. And Valentina, my co-author, I should mention, is writing her thesis using Reddit data and tracking how communities agree and disagree on certain topics. And so it felt like an exciting topic to be researching. Then when it came to GameStop, again, I frankly don't really remember because at that point, we'd been working on the paper for 9 months, and we were hoping to get out a draft around that time to share with friends and colleagues. So it was a rough and dirty work. Once we did put it online, it took 2 days for the price of GameStop to quadruple. And then all of a sudden, we got a ton of attention, and it was stressful in a way, but also obviously extremely lucky to kind of be propulsed into the mainstream media all of a sudden out of nowhere.
Yeah, so you'd been working on the paper for like 9 months about this phenomenon of Wall Street Bets before anything like really blew up to do with like GameStop and AMC and all the
That's right.
the
That's
stocks.
right.
That's fascinating. So you like stumbled into it by accident, like you were researching this phenomenon before it blew up.
I guess so. And even in the paper, we don't actually use much data from, I guess, what you would call the GameStop era, for various reasons. But I think the examples that we had were already so-called bull runs that predated GameStop. So some interesting examples are Tesla and AMD. So GameStop really wasn't on our mind at all when we were writing this.
Okay, so what did you find interesting about Tesla and AMD? Like, what phenomenon were you looking at when you were studying these?
So the key thing we wanted to take away from it was using the sort of network structure that we observe in how people were interacting. So Reddit is very useful because you have anonymous users with some identifier, and they post those submissions, which they can then upload for other people to see or download if they disagree with it. And then they can also comment on the submissions. And so effectively, once you observe certain people commenting on maybe a new stock, a new opportunity, and then watch them produce new activity from what they've seen, it was interesting to think about that as some form of social contagion, which we then wanted to model and, more importantly, measure, and somehow relate to what was actually happening in financial markets.
So, like, were you able to draw a lot of correlation between this happening? Like, how much? It's difficult for me to imagine beyond. Okay, so the GameStop thing has been, obviously, there's a lot of people involved in it, and the AMC phenomenon as well.
Yeah, certainly.
There's a lot of people. Like, we're talking hundreds of thousands, if not like at least 1 million, I think. But
I think it had 8 million subscribers at that point. When we actually started to write the paper, COVID just emerged. And so what was popular back then on the subreddit was to short the SPY ETF. So a broad, broad market. And that was really interesting. And there we already observed a tenfold increase in the amount of users and activity rates in general. So yeah, anyways, just to say that.
Yeah. No, I'm curious as to like, well, this network effect, because how much impact that these users were having on the stock market prior to like the meme stock blow up that started in January. Did you see, like, were you able to draw like demonstrable correlation between like activity on on Wall Street bets and then what was happening in the markets?
Correlation, yes. What was more difficult to establish is the causality, and that's something that we're working on right now. So there are some fancy statistical models that you can use to do that, and this is effectively what we're working on at this moment to really improve the paper, because we do want to somehow get an understanding of, is this activity really driven by what people are reading, or, is it still just a reflection of what's going on in the markets? Is it because AMD is doing so well that people are talking about it? Or is it really just because these are people who had never heard of it before and are reading about it for the first time on Wall Street Bets? So there's kind of this important distinction to be made, and that's what we're trying to do for the next versions.
So, because one of the things that springs to mind for me when I think about like whether retail investor activity is driving activity in the markets is how much it's based on the payment for order flow that's being sold to hedge funds and market makers, like Citadel, for example, from Robinhood, where they are buying the data and then making trades like ahead of the retail investors.
Yeah, I really think I'd find for that.
That's the thing that is like actually driving the
I see what you mean.
Yeah.
I mean, that's really hard to tell, to be honest. I think there are certain people who have, since GameStop, been able to link certain submissions to actually tick-by-tick data. So when you look at intraday data, who's buying what and when. And so I think some people have been able to show that, yes, people are buying stocks specifically after a certain submission has been made. But this is not something that we looked into too much. I think what was interesting for us to study when it came to the social contagion was that it's more like a sample of what retail investors as a community might be thinking. And so presumably, if you can observe how these beliefs are transmitting through a network, it probably tells you something about how other retail investors who are not on Reddit are also thinking.
Okay.
And so certainly there's a bit more to the retail investor community than just Reddit. But Reddit was a nice opportunity for us to study how they behaved specifically.
Yeah, I mean, it's all very on show on Reddit. Do you think, I'll get into that, where else it's taking place in a second, but do you think Reddit as a platform is like the key to this? That it's the thing that's making it possible? Because
that's a really good question. Yeah. This is something that we've been thinking about a lot. Inevitably, what it boils down to is what the platform is incentivizing. And so Reddit, not just in Wall Street Bets, but across all other subreddits, it incentivizes virality, right? Through the upload system, you only see what other people like to see, instead of Facebook or Twitter, where you see what sort of your friends see, not necessarily people with similar ideas.
Yeah.
It's certainly interesting to think about how that sort of changes the dynamics of the conversations. And it does appear to be that on Reddit, there's much more spread in sort of information and those memes, et cetera, and then possibly also certain things like polarization and Wall Street Bets as well.
Yeah, so because like one of the things that I've been looking at in the book is like to what extent was Reddit significant in this? Like to what extent was that the reason that this was able to happen? Because it's obviously functions differently to most other social networks. Is like there are no friends on Reddit. You know,
of course,
you
of
don't,
course.
okay, some people can follow users, but you don't have that same.
Yeah, that doesn't mean too much.
Yeah.
Some people might think that there are certain zealots, so people who are much more active in the conversations, who might start and carry the conversation. But this has also been sort of, frankly, quite difficult to find good evidence for. So it really looks like it's a bunch of people, and this group also evolves over time quite a bit. So the people who are on Monster Bets today are most likely not the same people who are on Monster Bets a year ago, let alone 2, 3, 4, 5 years ago. But you still, to some extent, observe some of the similar patterns in the data of how people are carrying the conversations.
It's because the thing that I'm really curious about in your work, and hang on, I'll get this quote up for you. Obviously, it's your thing. So this is from your article, Reddit Self-Organized Bull Run, that was based on the research you did. So it says users adopt the directional position of their peers such that they reach a consensus. They buy or sell a stock because other users also buy or sell the stock. This effect is especially large in bouts of selling, pointing to interesting psychological models of investor panic during a downturn. So basically, you're saying that even though we're all wonderful, rational human beings and very, very sensible, that sort of idea of humans sort of just all flocking together is kind of like, you can show that that's possible online, that happens as well. I was wondering if you think that's just like the way humans are, in the way they're going to interact with anything, in either stock decisions or like purchasing, investing, or just like generally on the internet or in life.
So investing as a social activity is something you can trace back to Robert Shiller, a Nobel laureate in economics. He wrote some important papers on that topic in the 70s. So the idea that investing and financial markets are, at least to some degree, social is certainly an old idea. And one of the, of course, early examples of that is, for example, the Great Depression, where so many normal people were investing in the stock markets and hit by the Great Depression and the ensuing panic, that you kind of have to think about the social aspect of it as well. So these ideas have been around for a while. What makes a difference today are a few things. First of all, the availability of those platforms means that these people can interact and transmit their ideas faster and better. And of course, for us as researchers, we get to observe these interactions for the first time as well. And so those people who study, I guess, behavioral finance, 20, 30 years ago, it was mostly around how we understand human behavior, and then how we understand human behavior in relation to what other people do. And this was often studied in the context of laboratory experiments. So if you look at, all these behavioral papers on risk aversion and whatever else, they gather a group of students, they stick them in a room, pay them a certain amount, and have them play certain games. And then you try to get away with an understanding of how they behave. Whereas now, with this data, we have a bit more of a real-time and quantitative feel for what is actually going on.
So do you think that the way that this psychology operates is different on the internet? Because like obviously like you're exploring phenomena that have existed in, like humans just, it's monkey see, monkey do. Like it's a trope, but it's a cliche, but it's real. Like people will just sort of go with the crowd on things.
Certainly. People are thinking more and more about this. I think yesterday I watched an interesting talk by Mirta Galesic at the Santa Fe Institute. And so a lot of those people are also really interested in what the internet is doing to how ideas are being transmitted and what people believe. It used to be the case that, you would grow up in a village. If you had a strange idea of, the sun rotating around the earth, you might be considered, a little strange, and villagers might be a bit wary of talking to you about this. Nowadays, you can go online and find people in those other villages to talk to. And when people build models of how these interactions are happening, it produces polarization. It produces things like a rapid spread in fake news and a variety of stock market phenomena. I think I also missed an earlier question of yours about this consensus and contagion. So it's one thing for these things to produce a large following. So people finding out information about the stock market and investing opportunities. It's another for them to actually agree on what to do about it. And this is what we try to refer to as consensus. It's really the alignment of those expectations and then eventually the actions that they take on those expectations. These are a big deal. Just because, the stock markets are usually just an aggregation of everyone's individual beliefs and expectations. If all of them follow the same line of attack, strange things happen.
Yeah, because I'm really curious about these ideas because, so one of the things that I've been looking at a lot for the writing of my book about this is that I've witnessed a lot of things start as jokes, become a meme, become widely spread, in this sort of contagion style of thing, but then it moves from being that into being a consensus because it becomes a meme. And a meme is not just like a picture, like it's an idea that won't die. Like, for example, right now, what's happening I don't know how much attention you're paying to this. Like, I sometimes I forget that like real people don't like pay attention. They're not on all of the subreddits related to GameStop all the time, like I am at the minute.
Of course.
But so what's happening at the minute is like it started this idea sort of sprung up about this thing called the infinity pool. So
okay.
So as the theory goes with like what happened with the short squeeze was that the shorts have to cover. They've sold short more shares than exist, and the thesis is that they never covered. Like when the price dropped in January, it wasn't because the shorts all closed their positions. So people began to say, well, in the theory of the short squeeze, they have to buy back all the shares that they've sold short, theoretically. I know it's don't quite work like that, but that's the sort of easy way of putting it. And they said that, okay, so if say everyone that owns 5 shares or more of GameStop says, I'm going to put 1 share into the infinity pool, I will never sell that. So this position can never be closed. And the theory was like a joke that is like, well, if we all agree to not sell some of it, the price will go up to infinity. But then it moved from being like a joke to something people were genuinely discussing, to something that is now turned into people directly registering all their shares with GameStop's share issuer in the hope that it will reveal how many shares are actually in circulation. And it's moved from like a joke to a meme that people talked about, to a theory, to something that has now become, I think there's 500,000 registered accounts with ComputerShare, that's GameStop share issuer. And the subreddits are just packed every day, like full of posts being like, oh, I've registered my shares, I've registered my shares, I've registered my shares. And I find it fascinating how we've moved from like joke to meme to idea to theory to what's actually happening. It's like such a cool like thing to witness, like the evolution of this idea.
No, certainly. I hadn't heard about this before, but I guess what I would say is, on the other side of all of these trades, there's going to be someone else. And just like with other pump and dump schemes, the idea is that, you of course, you always try to get people to buy it. And then eventually you want to be the first one to sell it. So it kind of makes you think about what will trigger a bout of selling. And what I mean by there's going to be someone else on the side of all those trades, there are other big players in the market, and they might observe what is going on, and they probably also have some experience about how to deal with this type of thing. So what would stop a fund from deciding to buy GameStop now, knowing that this will induce more people to buy more GameStop before closing their trades, and if it is the case that panic makes more people sell things faster, that could again just invite a crash. Obviously, it's really just a question of, I guess, how willing those people really are to coordinate on this, and that can change over time. People get bored of things eventually as well.
Yeah, I mean, I would have thought that everyone would have been bored with GameStop by now, but the community is more obsessed than ever. That's true. It's incredible to watch. I'm not like, it flies in the face of everything I know about how communities work on the internet. Normally they get bored, they get distracted, they start fighting, and then it falls apart. These people manage to stay so focused. It's incredible. For me, the interesting psychological thing is that they haven't been distracted, that they've just like kept going with it. Like, well, people, what is driving this obsession? I don't know. I think it's like a desire that they think they're going to get rich.
That's
or some sort
that's
of
one theory. They might just be very dedicated individuals. Something cynical inside of me might think that there could be other actors at play as well. We've certainly observed bot activity take up on Wall Street bets already in mid-2020, which is also part of the reason why when we wrote our paper, we did limit ourselves to data up until April 2020, because some of the patterns we observed afterwards were just a little suspicious. And I think, if I recall correctly, in January specifically, out of nowhere, silver became an important factor.
It's distraction.
And I guess so.
That's what the community said. It's like the silver is a distraction.
Again, what would stop those people who are pushing silver from now again pushing GameStop and taking ordinary people's money?
I can't say that that's not definitely what happened. I do want to say I don't believe that the people who started in GameStop and are still there, they thought it was about getting rich quick. But I've also now witnessed it turn from that to like revenge to these people have to go to jail. Like that's where it's at. The phrase is no sell, no sell.
Right.
So like if the short sellers don't go to jail, then we're not selling, which is an amazing development. Because, but having it started with like, we'll just, we'll all jump on, buy a few stocks, bankrupt some hedge funds, we'll have some fun, and then we'll all walk away filthy rich. And it's gone from that to like now they want justice in a way. It's a weird development.
Okay.
But I'm curious about this bot activity that you're talking about, because obviously it's been a thing that was talked about a lot online. Was the second, I'm sure it was happening before January 2021, but there was like immediate, it's like, right, okay, well, this subreddit is compromised, it's filled with bots, it's being used by hedge funds or bad actors for pump and dump schemes and the main accusation was that like things like silver were a distraction from GameStop, because it was amazing actually. I remember looking at the news and like seeing a few headlines be like, oh yeah, Reddit is targeting silver now, like the short sellers move on from GameStop, they're onto silver, and there was 1,000 articles about that. And I went on the front page of Reddit, the top post, not like on Wall Street Bets, like the top post on Reddit was do not buy silver, this is a distraction. Like, because Reddit was not saying go buy silver, this was someone else had decided to plant this idea. So like what sort of bot activity were you seeing, and like how were you able to identify it as bot activity?
Subjectively, I honestly don't really remember what was going on in April. I think it was I think Tesla was quite hyped at that time with the whole stock split thing. So I can't point to any objective measure. That being said, it wouldn't be difficult for someone to do. Again, I think at the Santa Fe Institute, there's a researcher, I believe, Philip, who has researched bot activity on Twitter. So there exists objective measures which you can use to find out the probability that a certain account is a bot. People are doing this, especially for Twitter, because obviously it's quite a big deal there. When it comes to Reddit, I don't know if anyone having done that before. We didn't get around to do it. I think for us it was just a case of April 2020 is good enough. That's 4 years of data. we'll leave it at that. And yeah, I'm afraid I can't really remember what ticked us off back then.
That's all right. The interesting thing, one of the interesting things that happened with one of the GameStop subreddits, r/superstonk, was they created a shill / bot detecting machine algorithm, whatever they were. I don't know exactly how it works, but they were scanning people's post history to try and figure out if they were genuine retail investors, like actual people who wanted to be in this stock, and how many of them were like being paid, or how many it was like programmed bots. So it's fascinating to like watch people try and like they make the accusations that people are bad actors or bots or shills, and then it's so difficult to tell is like how much of this is like I've disagreed with you and therefore you're a shill.
I mean, also on Twitter, I guess when you have an account that's posting 100,000 times a day, that might be a bit of a giveaway. And I think there have been certain measures, like Twitter has limited the number of tweets to 4,000, but now these bots are programmed to delete their tweets, and apparently that somehow gets around that limit. So I guess between just that and, of course, the timing as well, I think there should be some ways to at least find out what the probability that something is automated is online.
Like how much do you think this is like genuinely impacting the real world?
Sometimes quite a bit. I think what we came away with, and something that we want to establish better in our next version of the paper, is that I think over the years, something like 1,000 to 5,000 stocks have been mentioned on Wall Street Bets, but only about 10 have really captured most of what people have been talking about. And these are mostly tech stocks, as you can imagine. They do love those. And certain ETFs as well. This SPY, obviously, from COVID, and some gold, oil, I think, shows up. So when we look at the data, we certainly observe certain periods of time where some of those top 10 stocks were discussed almost exclusively and very intensely. And the simple exercise that we did in the current version, which we hope to kind of elaborate on, is if we know that some of Wall Street Bets activity stems because people were talking about that stock yesterday. Yesterday, they don't know what is going on in the market today. So to what degree can we use activity yesterday to predict what is going on today? Hoping that we extract some sort of more causal relationship, let's put it that way, to the degree that the stock market is not correlated over time, of course, which, whatever. And I think the biggest indicator we got there was really in trading volumes. So returns are always going to be noisy. They're always all over the place. And of course, stock market is also thousands of stocks. So to identify one particular pattern from, 10 instances where Wall Street Bets got excited is difficult. Volatility is serially correlated, so this kind of exercise doesn't work as well. But for trading volumes, we have to say that we're kind of surprised as to how well these cycles in Wall Street Bets lined up with patterns in trading activity on the actual stock market.
Why do you think it's those 10? Like you identified like 10 stocks. I'm going to guess that through 2020 is definitely Tesla, AMD.
That's right. And other tech stocks.
Palantir was touted for a while. But yes, why do you think those 10 stood out? Like, is it an accident? Is it just like whenever you're dealing with that sort of network effect that like you'll get, it's just like a random selection of ones that like catch fire? Like if you were to like throw a match onto something that was all flammable, like just with your eyes closed, that some of it would catch fire. do you know what I mean?
Yes, of course. At that point, it really has to do with the prior information that the users have. So when we try to figure out who those users are, we can look at their activity outside of Wall Street Bets. And what we came away with is that, they're mostly young males. And so the subreddits that they're frequent will often be, generic Reddit ones, but also things like the gaming subreddits. Some of them are, into building their own computers. And so they'll be familiar with AMD and they'll be familiar with Intel. And so when AMD produced a new generation of fantastic processors, they were the ones who believed they knew about it, and they were able to communicate that to a broader audience. They hype it up and drive up the price of AMD and trading of AMD, of course. And I think this relates to the other stocks as well. So Tesla, there's a lot of material always going around Elon Musk. And so people enjoy reading about that. Yeah. The people on Wall Street Bets enjoy talking about it. So that was always going to be a big hit. And then the rest are just other tech stocks that I think people of that particular background will be exposed to and knowledgeable about. Snapchat was an interesting one because it was one of the ones that was being shorted. NVIDIA,
that's interesting.
That's right. I think in the very early version of our paper, we in fact actually showed the network of interactions on Snapchat. But this was also, I think, in 2016 or 2017. NVIDIA came out because of a couple of things. People were excited about its use in AI and also Bitcoin mining. So in 2017, the price of Bitcoin shot through the roof, one of those many times. So to a certain degree, it's prior information that these users hold about things that are relevant to them.
Okay, so it's things that community would understand and things that they would be familiar with, and things that would just be like more widely popular rather than someone writing some real good DD.
And of course, I would say a pinch of broad economic trends. So oil and gold and the SPY, of course, as well.
Yeah. So you say you say that you were looking at this in like 2016, 17.
Mm-hmm.
So like is that when you sort of pinpoint this really sort of taking off? Because Wall Street Bets as a subreddit was founded in 2013, as far as I'm aware.
Yeah, I think 2012 actually, January 2012. Yes.
Well, so is this something that like is 2016, 17? Is that when you would like pinpoint this became like a phenomenon that was big enough that it was able to be detected in the wider market?
Big enough, yes, probably around 2016, 2017. The big uptake that we observed took place in 2015, which coincides with the release of the Robinhood app. And that was really curious for us. So for a while, there'll be about 1 to 10 submissions a day with a handful of comments. And suddenly in 2015, it took off, and it was growing exponentially since then.
Okay. Like, so do you think this is like a trend that's here to stay, like separate from the because what's really stunning is that most of the people who are involved in the GameStop saga that's the only stock they hold.
Right.
That's it. Maybe they have some AMC as well, but generally that's it. Their portfolio is GameStop.
Sure.
That's it. So I don't see that community as such as being like the traditional retail investor anymore. Not in the way that, like, I say traditional. The phenomenon's not that old really, but it's not the typical like person who's on Superstonk and GME Jungle and things like that is not the same people that are on Wall Street Bets, because Wall Street Bets actually got quite mad at one point because the subreddit got taken over by discussion about GameStop, and like that's part of why they ended up leaving and making their own things. Like, of course, there was also accusations that it was compromised by bots and shills, and the moderators have been bought and things like that.
Sure,
but the phenomenon of retail investors like on Wall Street Bets, like discussing stocks and things on the internet, and just like trading and people becoming more involved in the stock market generally. Do you think that's going to continue to increase, or do you think this was like the pandemic happened, everyone was sat around bored, let's just we'll buy some call options and have some fun? Is it something that's going to continue, or is it like a a function of the time that we were living in.
It might be worth mentioning that GameStop was kind of a special event because of the short selling side. They shorted over 100% of the available shares. So it was certainly a big opportunity for the retail investors to produce a big move in its price. These things could happen again. That's obviously hard to speculate on. As far as this thing as an internet phenomenon goes, again, it happened before the pandemic, so it will probably happen after the pandemic as well. And it doesn't have to be Wall Street bets, right? I guess we spoke about this earlier. What made Reddit special is just its structure and how it really pushes viral content, things that as many people as possible want to believe in. It could be that there might emerge a new site or new subreddits, at which point, it's really just a question of either new users or again, users just moving on to something else and finding another platform to coordinate on.
Do you think like people have become of like, so like say our generation, are they more aware now of like just even the idea of investing because of like what's happened over like the last year and a half or 2 years, like this phenomenon that's happened? Like, are we more conscious that saving doesn't work anymore because interest rates are about zero and like it's like, well, my money's sitting in a bank account making nothing. I may as well have some fun with it, basically. Do you think that's like...
I think so. I think already with the financial crisis, there was a bit of a push to demystify finance, so-called, if you will, through movies like The Big Short, and obviously, just the popular concept of what made a banker or a trader. So I think, our generation appears to have been taking finance a bit more seriously. 30 years ago, it was probably a bit of a nerdy thing and uninteresting to the public. And of course, the interest rate is a big part of that story as well, or not even the interest rate, but just broader macroeconomic trends.
How much of it do you think is like that? We've got crypto, and now everyone, the people have just seen like crypto explode. They're like, maybe I should look at this, and that then they sort of dive a little further in, and or how much of it do you think maybe is like people looking at the way the stock market functions, and they're like, well, it's a casino, so we may as well place some bets too.
That is a very big question. Something that we started to work on more seriously. The gamification of the stock market, in short. That's something that's really hard to pin down, obviously. Over centuries, what made the allocation of capital through the stock markets function has evolved, even just through technology, computers, and eventually the internet. Where was I going with this? Right, the gamification of the stock markets. It's something that will obviously warrant further research because it's unclear what this will mean just for, I guess, imagine if you're a startup and you want to raise money to finance your investment. Traditionally you sell part of your equity ownership in that firm to raise money to invest. What if now that's just a toss of a coin? It could be that you now have to include blockchain and green energy in the name of your company to have people take it seriously. So it does raise some of those questions, which are more difficult to answer, to be frank. There's always been a mix of people trading in the market. Those were usually, institutions, pension funds. Now retail investors appear to be taken more seriously. I think only time will tell, unfortunately.
What do you think the long-term impacts of this are? Like, what do you see as like this phenomenon of retail investors getting involved in the market? Like, how do you see that changing, if at all, how the financial world works?
Well, at the very least, you would expect there to just be more volatility, I suppose. If these big jumps do occur every now and then. I guess again you have to think about how the institutions would think about it. I guess one thing we came away with is that short selling became a bit less popular.
Yeah.
So I mean that's something to think about as well, right? Is it okay to just absent-mindedly take a position because you found fundamental value for it without worrying about what might happen to it in the short term? So I think in the long term, this will be on people's minds.
Okay. So the last thing I kind of want to ask you about is basically you've talked a little bit about the need to legislate about this phenomenon, or like build some sort of framework of rules or something surrounding it. Like, what is it that you're concerned about that you think should be like legislated to control? And do you think that is ultimately the best place to begin with regulating finance?
Well, let's put it this way. If those Wall Street Bets users were bankers sitting in hedge funds, we would be screaming market manipulation. I think the reason that's not happening here is because they're all anonymous and there's, like you say, millions of them. So that's not going to happen. I think no one really knows, to be honest. You could say that there needs to be some education about the risks involved, because there will be. People will reply that Wall Street Bets, it's in the name, people are taking bets.
Yeah.
So they should be aware. You can certainly see arguments for both sides being made. When it comes to actually concrete legislation that can be made, I think people are floating the idea of restricting, I guess, the trade of options. I think that's already the case. At least for certain brokers, where you have to show that you've been buying or selling stock for 5 years before you can trade options. I guess Robinhood somehow does not follow that, so you can. Unfortunately, it's something I don't know that much about. But yeah, I guess someone should look into that.
Yeah, no, because I mean, it's very difficult for people to make that accusation of market manipulation, I think, because it's leaderless. Do you know what I mean? You could,
of course,
unless there's someone saying, "Okay, I'm in charge. Here's what we're going to do," and instead you just have a bunch of people arguing on the internet, and some people decide to make decisions based on the arguments. So I
mean, the point of a leader is to find someone to prosecute.
Yeah.
That's not going to happen. But, when it came to LIBOR as well, it was banks colluding tacitly. So they didn't, I don't know, I don't think that they were communicating publicly about what they were doing, obviously. And I don't think that there was necessarily one leader. And I'm sure you can think of other examples of situations where there were probably a few, funds, again, without a leader, just making the right trades at the right time, and or selling at the right time, as with Wirecard, I believe. That's unfortunately a difficult question to answer.
Yeah, it really is. But anyway, Julian, I want to really thank you for your time and make sure you don't miss your train. So is there anything that you would like to plug or point people towards? I'll put the link for your paper, Reddit Self-Organized Bull Runs in the description. Is there anything else you want to point people towards?
No, certainly. So if you're more interested in these sort of herding dynamics on the internet, my co-author Valentina Semenova is doing research on that. There's a group of researchers at the Santa Fe Institute as well. Samirta Galesic is the name that I came away with, but I think there are others who are really looking at these internet phenomena. And I'll leave it at that.
Okay. Brilliant. Well, thanks for your time, man. It's been really interesting.
Thank you very much, George. This was good fun.
Thanks so much for listening. I really appreciate you tuning in and making it all the way to the end of the show. Please don't forget to like, share, and subscribe, and we'll see you next time. Thanks for listening.